Can tax losses offset capital gains? A question I got asked recently. Realize it can be quite confusing, but it's something that's really valuable to understand and get right. So things that might be labeled tax losses, there's effectively two groups here. One is a pure tax loss, i.e. a capital loss, which happens essentially when you buy an investment and then sell it for less than you paid for it. That reduction in capital value is called a capital loss, and sits as a separate line item on your tax return. Then there's also tax deductible expenses, which you probably not technically a loss, but you could consider them in this bracket. So when you get deductions for negative gearing, paying for tax or financial advice, or just your general work-related expenses, are all tax deductions that can create a tax loss. Now, the good news is that both pure capital losses and tax deduction-based losses that I just mentioned, they both offset capital gains. And there's another rule that can help you out here when it comes to reducing capital gains, which is the long-term capital gains tax discount, which applies for investments that you've held for longer than 12 months. So to give you an example here, if you bought a property for $500,000 and then you sold it later for $1 million, you'd have a $500,000 capital gain. Now, if that gain had been made within a 12-month period, i.e. you bought the property and sold it within less than 12 months, that entire $500,000 gain would be a pure capital gain. If you'd held the investment for longer than 12 months, then you get a 50% deduction or a 50% discount on the capital gain. So total gain $500,000, 50% discount means that the taxable gain is only $250,000. Now, if you've got a discounted capital gain of $250,000 and you then have some tax losses that you can offset against, say you had 20 grand of capital losses and $30,000 of deduction, so $50,000 in total. You've got a $250,000 taxable gain, $50,000 to reduce that by, and essentially the remaining gain that you would pay tax on is that $200,000. Unfortunately, if you've got big capital gains, it can mean big tax bills, but the good news is that you made the big gain to begin with. If that's you though, you definitely want to be all over your strategy and make sure that you're making the most of deductions and do it before the financial year finishes, because once that's done, it can be too late to change very much.